So after the analyst downgrade to Intel last week that made the stock drop significantly, I really thought it was a good idea to look closer at it because this is something I really would like in my portfolio actually. So let's take a closer look. Many people are probably very familiar with Intel, but if you're not, Intel Corporation, they engage in the design, manufacturing, and sale of computer products and technologies worldwide. They offer platform products such as central processing units, chipsets, system on a chip, multi-chip packages, and a lot of non-platform or adjacent products. Over the last year, it's taken quite a significant beating. It is down 31.72% over the last year, and you can see here recently in the late June, it dropped from 44 to below 40 based on the analyst downgrades. It has a market cap of 163.59 billion at the time of recording with a share price of 39.18. It trades at a forward PE ratio of 11.22, which is 6.46 below the 5-year average PE ratio, which is 12. The revenue is growing, so that's a check. And the profit margin is above the 10% mark. It's at 25%, so that's also a check. Net income is also growing, which is nice. And they are doing share buybacks. They have reduced the number of outstanding shares by 12% over the last 5 years, so also a check. The dividend yield is at 3.73%, so definitely a check. And the payout ratio is a very healthy 28.43%, so that's also a check. Dividend growth rate over the last 5 years is 6.25%, which is also really nice. Unfortunately, they have only grown their dividend for the last 8 years, but they have paid out a dividend for 29 years actually, so it's quite a stable company in that regard. So the dividend per share is increasing. Unfortunately, the free cash flow growth isn't there right now, and that's because they are investing quite heavily in themselves right now. The long-term liabilities are easily coverable by 5-year free cash flow. It's at 3.16 years, so that is a check. And the price to free cash flow is below that 15 to 20 mark I like it to be at. It's actually at 11.3, which corresponds pretty nicely with the PE ratio. So that's also a check. And I believe it's at a pretty good fair value right now compared to the free cash flow. Before we jump into the verdict, if you did enjoy this video, please consider subscribing to our channel for more content in the future. And if you did enjoy the video, please leave a like as well. And let's jump right into the verdict, which is 12 checks out of 14. And I believe it's potentially 25% undervalued based on the free cash flow right now. And when they get the foundry up and running, this will be a major game changer for them, I believe. It is not a short-term bet. It's a multi-year bet on return to excellence for Intel as a former market leader. If they can get back to that successful leadership, I do believe there are very, very huge growth potentials in this company. So thank you so much, guys, and I will see you in the next video. Bye.